You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 31st day of January, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. First live broadcast every trading day is from 9:20 a.m. Eastern to 11:30 a.m. Eastern. That's our live training room. That's a private broadcast open only to our members and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com. And at the very top of the page, there's a link that says 5-day free trial, no credit card required. Just click that link, fill out the registration form properly, please, so that we actually get notified that you requested the trial. And the same day, we'll get your indicators indicating, get your desktop set up. And the following day is when your trial will actually begin. So if you're thinking, well, it's the middle of the week, I better wait till Monday, don't do that. Because you'll get 5 consecutive trading days, even if it stretches over a weekend. mytradingiq.com, top of the page, 5-day free trial, no credit card required. Click the link, fill out the registration form, and you're good to go. You will hear back from us shortly. If you don't, email us, support@cfrn.net. When the live training room ends, we take a 30-minute break, and we come back for the afternoon broadcast. That would be this broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click that link, complete that 30-second registration form, and you're done. What will happen every trading day going forward, you'll get an email about an hour before this broadcast starts. In the email, there's a link. So all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Now, there'll be days you're out of the office, away from the desktop, but you'd still like to join live. You can. And there'll be days when you're busy and can't join live, but you want to get caught up later. You can do that too. I'm talking about our YouTube channel, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today or this week, but thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Just pick some days at random. Listen in a little bit. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. All right, let's get into it. We'll start out with our daily devotional and word of prayer. Then we'll get into the markets. And then about 12:45, 12:50, Michael will join us. He'll give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes. And then I'll complete my recap and end with our good word for the day. Now, the topic of our devotion, which we started last week, is how to be rich God's way. Today's scripture, 1 Timothy 6, verses 17 through 19. And I'm going to share with you from the Message translation. Tell those rich in this world's wealth to quit being so full of themselves and so obsessed with money, which is here today and gone tomorrow. Tell them to go after God, who piles on all the riches we could ever manage, to do good, to be rich in helping others, to be extravagantly generous. If they do that, they'll build a treasury that will last, gaining life that is truly life. Again, that was 1 Timothy 6, 17 through 19. The consumption assumption. Jesus taught his followers a rather interesting definition of greed. He said that greed is the assumption that everything placed in our hands is for our consumption. The scene where Jesus taught this concept is recorded in the Gospel of Luke. One day when Jesus was preaching to his followers, an argument broke out in the crowd. It was an argument about greed. One person accused the other of greed and vice versa. In response, Jesus began to tell a story. You'll find that in Luke 12:16, it starts, the ground of a certain man, a certain rich man, yielded an abundant harvest. So here's a rich guy who finds himself with more than he needs. He had a good year. So what will he do with the extra? Now remember, Jesus is telling the story. Jesus wanted to get us thinking about the different things we could do when we find ourselves in that situation. He wanted to teach us the right and wrong ways to respond if we ever find ourselves with more than we need. He showed us how to be good at being rich. And interestingly enough, the rich guy in Jesus' story did what a lot of us do when we have good years. So Jesus continued speaking in Luke 12:17. He thought to himself, what shall I do? I have no place to store my crops. Then he said, this is what I'll do. I'll tear down my barns and build bigger ones, and there I will store my surplus grain. And I'll say to myself, you have plenty of grain laid up for many years. Take life easy. Eat, drink, and be merry. So the rich man in the story tore down his old barns and built new ones. At first glance, that seems pretty reasonable. In fact, it's industrious. So far, it's just a good story. We like the premise, we like the main character. We're living vicariously through his season of good fortune. We're just waiting for Jesus to say, and he lived happily ever after. But then things took a morbid turn. God said to him, "You fool, this very night your life will be demanded from you. Then who will get what you have prepared for yourself? This is how it will be with whoever stores up things for themselves, but is not rich towards God." Luke 12, verses 20 and 21. Like most things Jesus had to say, this parable represented a monumental shift from conventional thinking. He was announcing a new paradigm for those times when we find ourselves with extra. Whenever we have more than we need, our natural assumption will be that it's for our own consumption. But that's the wrong mindset. Jesus was exposing the flaw in that way of thinking. If we simply store up for ourselves and are not rich towards God, then everything we possess will be a total loss. At some point, everybody leaves it all behind. But if we will take advantage of the times when we have more than we need and do more than simply save it for ourselves, then we can become rich toward God. And the implications is that it won't be a loss anymore. Join me in a word of prayer. Heavenly Father, we thank you today for all of your many blessings in our lives. Lord, we pray for a world that seems turned upside down. So much going on from Capitol Hill, the border, the Middle East, but we know that you have everything under control. So Lord, we thank you for every blessing that you have placed in our hands. Teach us, God, to be generous with others. We all know someone who has less than enough. So let us be mindful to always share what we have with others. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. Well, happy Tuesday. Happy Tuesday. How about Wednesday? Yeah, that works. I hope it's a happy Wednesday for you. The big news, of course, is the Fed announcement this afternoon, 2 p.m. Eastern. Now, markets could get very volatile based on what the Fed says. And it's not just the 2 p.m. announcement of the FOMC statement, but at 2:30 p.m. Eastern, that's when Jerome Powell comes to the podium and delivers his prepared statement. Then the markets may get really volatile as he starts to take questions from the audience. So the best advice is to be flat during that period of time and then pick the mouse back up once the market resumes its normal rhythm. So starting here in the U.S., these are the numbers from around the world. These are the cash markets or the indices. The Dow's up 13 points. The NASDAQ is down 210. That's almost 1.5%. S&P 500 is down 39, almost 1%. The Russell 2000 down 13. In the commodity basket, crude oil is down $1.31, trading 76.51 last. That's a drop of over 1.5%. Gold up $17.50, trading 20.6840 last. That's a gain of almost 1%. And silver unchanged on the session, trading 23.22 last. In the Asian markets at the close, Nikkei posted a gain of 220 points. Shanghai fell 41, and for the Shanghai, that's 1.5%. The Hang Seng fell 218 points, which is almost 1.5%. And in the European markets at the close, FTSE down 35, the DAX down 68, CAC down 20. So we had a mixed day in Asia. It was a red day for the UK. So far, it's a mixed radio Wednesday here in the US of A. The Dow is the only major index in the green, and that's only by 13 points. Compared to the others, I would suggest that the Dow will probably end up lower by the end of this broadcast. That's not a prediction, simply an observation. Now, I did not issue any new Logic 247 alerts last night or this morning. As I said yesterday, I was just going to hold off till we get this whole FOMC behind us and the market resumes its normal rhythm. Valor did a recap this morning at 6:30 a.m. Eastern. So far this week, we've issued just 24 alerts since the markets opened Sunday night. At the time of the recap, we were still waiting on 8. That gave us 16 actionable alerts, of which 5 would have been stopped out. That's 31% of actionable alerts stopped out. We're in week 287. Over the last 287 weeks, we've issued over 16,000 individual handcrafted alerts. Every one of them a trend trade, as defined by the 30-minute chart, price, and the BBC. Over those 287 weeks and 16,000 plus individual alerts, we've averaged 20% or less being stopped out based on market structure and a very simple process that we teach all of our lifetime members. So right now we're sitting above the average of the last 287 weeks, or at least we were at 6:30 a.m. this morning. Now the logic alerts are based on current price action, but there's time built in for you to get the alert, study the 30-minute chart, see the window of opportunity that exists, and then be prepared to take action when price reaches that area, using everything you learn each morning in the live training room. So the 30-minute chart I use as the roadmap to help me see where opportunity is. And if you'll use the alerts in the way that they're intended to help you learn to spot windows of opportunity, pretty soon you'll become self-sufficient. If your goal is to trade for a living, that'll never happen as long as you're waiting on somebody else to tell you when to get in and when to get out. You need to learn how to read the chart yourself so that you know when it's time to get in and time to get out. Along with the logic alerts, which come out around the clock, because futures trade around the clock and we have traders around the globe, a logic alert can come out at 2 a.m. or 2 p.m. But our original alert service, the concierge trade alerts, they're a little different. They're posted as a static report shortly after the Globex open. With the logic alerts, I look left for you to show you where the potential obstacles are to the trade, whether it's long or short. With the CTAs, you're kind of stepping up your game because this allows you to learn to look left yourself and know where price movement may run into an obstacle, whether it's climbing or dropping. So last night, the Tuesday session began at 6 p.m. Eastern. At 6:45 p.m. Eastern, this report was published for all of our members and trial members. Because this broadcast is open to the public, if you want to grab a quick screenshot, you can. If you're watching this after the fact on our YouTube channel, you can just hit pause on the video and jot down whatever numbers would be important to you so that you can go look at your charts and see how it would have benefited you to have these targets 45 minutes into the open last night. Okay? So the first thing you do when this report is published is go to the 30-minute chart of whatever markets you actually trade or are learning how to trade. We'll use the ES as an example. The price at the time of the release will always be between these two numbers. So make a note on your 30-minute chart where price was at this time. And then draw a line in the sand at the long target, a line in the sand at the short target. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now the BBC, that's the green line you'll see on my charts. It just stands for bull, bear, cross. When price gets above the green line, we're bullish and we anticipate higher prices. Price gets below the green line, and we're bearish and we anticipate lower prices. It's pretty simple. Again, with the CTAs, you get to look left yourself to spot the potential obstacles. Use the alerts as they're intended. It's not just for you to trade the alerts so you don't have to learn how to trade. It's actually part of the learning process. Also, you will learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern, so they close Friday afternoon at 5 p.m. Eastern. If price is above the 30-minute BBC, it's trying to get to the zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones every week since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern. This way our members and trial members have an opportunity to get the zones on their charts before Wall Street even wakes up for the week. Once the zones are published, they're carved in stone for the entire week. They do not change in any way whatsoever. Beyond that, resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's go take a look at the daily chart. Now the reason we look at the daily chart first is because it gives us important information. If you were tuned in yesterday, for the last couple days, I told you that the step line, that's the black line, was in the process of crossing blue and climbing, starting to lean over. It's probably on this day. But again, you can go to youtube.com/CFRN and listen to the broadcast in its entirety from the day of January 26th, 29th, 30th, 31st. Okay? And the step line is crossed. So what do we expect to happen now? We expect price to pull back to the BBC. Pull back to the BBC holds more often than not, whether it's pulling from below or pulling back from above. It holds more often than not, but eventually it will trade through. Over here we had the market drawing legs to the downside. Leg, retrace, leg, retrace, leg, retrace, but this retracement went through the BBC. So now we're going to start drawing legs to the upside. Leg, retrace, leg, retrace, leg. And so we've got the 24% fib extension just above the daily BBC. So that's two good reasons that this area should be support, or as I refer to it, as support times 2. Now, It doesn't matter what market you trade, or individual stock, or crypto, or Forex, or ETF. It will benefit you greatly if you learn to spend 2 minutes with the daily chart before you go to your smaller time frames to actually start trading. Why is that? Because the institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. The institutional traders are working with accounts in the hundreds of millions, billions, even trillions of dollars. So when those deep pockets trade in the size that they trade, that actually moves price. And so we can see right here who has the upper hand. And so we know that the buyers are not committed to buying right now. In fact, things are pretty quiet ahead of the FOMC. But because the step line has crossed, do anticipate a continued downward move into the area of 48.86 and the daily BBC. Now, it being Fed day, we very well could get there today. If not, probably tomorrow. If the Fed surprises to the upside and we can get above the 38% fib extension, then our next resistance overhead would be the 50% fib extension. If price were to trade through the daily BBC, then here's the 24% retracement from the low that was put in October 27th to the high put in on January 29th. The high of the 29th was 49.56. Oh, we hit 57.25 yesterday. So we took it out by 1.25 points. And I always tell you, when you get a new high of 1 or 2 points, be very cautious. Because if that's a failed breakout, is probably a term you're familiar with. Okay? And most breakouts fail. So, by looking at your daily chart for 2 minutes, you get the high altitude lay of the land, look at the markets, and then you're ready to get down to business and start trading. All alerts are created on the 30-minute chart. Yesterday on the broadcast, we drew in this window of opportunity. This was the final candle yesterday. The vertical line separates today, Wednesday, Tuesday, back over here is Monday. Yesterday, price spent most of the day consolidating at the weekly trading zone. When price encounters a zone, 70% of the time you'll see consolidation, 20% of the time rejection, 10% of the time the slice. So on the final candle yesterday, this window of opportunity from 49.38 down to 49.34, that was a 4-point window, filled beautifully in the final 30 minutes of trade. And then we get the open last night. The open just below the zone, consolidate below the zone, price is kind of trapped here. We get a pullback to the BBC, and even though we spike it, the pullback holds because both of these candles are still touching the BBC. So we get a nice leg to the downside, and then we get a retracement back to the BBC. Price spikes up to that previous swing high. Lots of people get long here. Okay, those are called trapped longs. And so as price comes down and hits their stops, well, this is what you get. Now that price has gone from zone to zone, what's happening at the zone? Consolidation. The step line is attempting to cross red and falling. If it does, we anticipate a pullback to the BBC and then another leg to the downside. If price overcomes the BBC, then you have a little window of opportunity up here. But keep in mind that this high right here is potential resistance. The zone is potential resistance, and then this little triple top here is potential resistance. If the market continues lower, recognize you've got a double bottom right here, which is potential support. So you would then let price get below and trade this window here. Okay, got to make sure price takes out those lows, because price is always trying to reach a weekly trading zone. If we're below the BBC, it's trying to get to the zone below. If we're above, it's trying to get to the zone we're ahead. Okay, bull bear cross. When price crosses above the green line, we're bullish, we anticipate higher prices. Price crosses below the green line, we're bearish, we anticipate lower prices. On the Dow, which when I gave you the numbers from around the world, Dow was the only one in the green, but that has changed. Last night we ran up to the target, and then we went sideways, pull back to the BBC. Remember, the pullback holds more often than not. And from there, we ran to the target. Pull back to blue and climbing, found support, hit the target again. Pull back to the BBC, the pullback held, back to the target, back to support, back to resistance, support, resistance. When you've got these kind of wicks to the upside, then the move is most likely going to happen to the downside. So 38,570 to 38,550, that would give you your goal for the day. It takes 2 points to get your goal for the day on the ES. It takes 20 points on the Dow. ES pays $50 a point. The Dow pays $20 a point. On the Russell, here's where we opened last night. Price consolidated along the BBC, and then it reached up off the London Open and hit the long target. Then price got back below the BBC, ran to the short target, and then continued on down to the zone below where it found support. Remember, when price moves up to a zone, we expect resistance. When it drops to a zone, we expect support. And again, only three things happen. 70% of the time is consolidation. 20% of the time is rejection. That's what this is. This was a red candle all the way down to the zone, but by the time the 30-minute candle closed, it was way back up. And again, and again. Then there's the slice. See how this 30-minute candle sliced through this zone like it wasn't even there? When it ran out of steam, it retraced back to the zone it sliced through, and then continued in the direction of the slice to the zone below, where it's now been consolidating for hours. On the NQ, we had a gap lower open last night. Price pulled up to the zone, which we expect to be resistance. There's that consolidation 70% of the time. Let's pull up to the fact that we came within a tick of the BBC and we couldn't quite touch it. That's a sign of weakness, which showed up over the next two candles, which took us down to the target and to the weekly trading zone where we consolidated for 1, 2, 3, 4, 5, 2.5 hours. When the market finds support, it's going to go look for resistance, which it found at the BBC. It even spiked up to the zone, almost like an obsessive compulsive sort of thing. When the market finds resistance, it's going to go look for support, which it found right here at the weekly zone. Support sent it to resistance at the BBC, and then that resistance sent us looking for support, which we found here. And now price is attempting a pullback to the BBC, but we're printing a red candle. So if price continues lower, then you've got a window of opportunity from 318 down to, well, 308. That would be $200 per contract traded. But you got to let price get below this low right here, because you have to remember this was a red candle initially, but then buyers came in and drove it up, and so we know that there are buyers at this price. So we need to see price take that out before we go short. On crude, here's where we opened last night. We attempted the long target, made it up to 78.11, so we missed it by 4 ticks. Then we've got red and falling, so we're anticipating lower prices. We get to the zone and the BBC, consolidate for quite a few hours, and then here's that move off the London Open, which takes us down to the short target and the zone. And look, there's hours of consolidation. Support sends us to resistance. Resistance sends us looking for support. So from 75.80 down to 75.70, that would be enough to get your goal for the day. Gold, we are in the J contract. Price opened right at the weekly zone. It made an attempt to get to the short target. This candle opened at 2052.8 and it dropped to 2050.9. Okay, so that's $200 per contract traded in that one candle, even though it failed to make it all the way to the target. Then price gets above the BBC, consolidates at the zone. We get a leg, which gets us real close to the long target. Missed it by 4 ticks. Then we get a pullback to the BBC, and then we make a run to the target. Resistance sends us looking for support. Support sends us looking for resistance, which the market found at the weekly zone. Notice the step line, the black line, has crossed blue and climbing. So what do we expect? We expect price to retrace to the BBC. The pullback holds more often than not. Now, this would be a counter trend trade. In the Logic 247 channel, I said there's over 16,000 alerts. Everyone's a trend trade. There's nothing wrong with counter trend trading. It's not illegal, immoral, or fattening. However, when I'm teaching new traders how to trade, I find it's better, simpler, to trade with the trend than against the trend. Okay? Once you are accomplished at trading with the trend, then if you want to experiment with counter trend trading, do it in your demo account. Price is always doing one of 3 things. It's going up, it's going down, or it's consolidating at a zone and often at the BBC. Okay? Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. Yesterday's low is at the zone. Today's high at the zone. We spiked it, tried to go higher, and we may go higher eventually. But because the step line is crossed, the high probability move is back to the BBC. We trade every market exactly the same. We're not teaching you how to trade a specific market. We're actually teaching you something far more important. We're actually teaching you how to trade. Because once you understand how price flows the same across all markets and all time frames, you can trade anything you want. Futures, stocks, crypto, Forex, ETF, doesn't matter. So learn how to trade, and then you can trade whatever you want. Because price flows the same across all markets, all time frames. We're sitting on silver. Well, we came down to the zone, consolidated, hit the short target, and then we make a run to the upside, and we run into this resistance previously established, which sends us back to the zone for support. We get a leg, a retracement, and a leg that takes us all the way to the target. Resistance will send the market looking for support, which it has currently found at the zone, but we got red and falling overhead. Okay, so if price were to bounce above the BBC, both the BBC, the step line, and red and falling are all potential resistance. So a long window of opportunity would look something like that. And a short window of opportunity, got to get below those lows. It only takes 2 pennies in silver to get your goal for the day. When the price of silver moves $1, that's worth $5,000 per contract traded. When the price of gold moves $1, that's worth $1,000 per contract traded. Crude's $1,000 a buck. Silver's $5,000 a buck. Gold is $100 a buck. Okay. And as you can see, we're trying to get below the zone, but remember, there's potential resistance here, and there's potential resistance here, and here, and here, which is why I put the window of opportunity here. So by the time we meet again tomorrow, one of these windows will have filled. And on the euro, here's where we opened. We dropped to the short target. In pretty short order, we had the perfect stack, price, step line, red and falling, BBC. We get to the zone that was published Monday morning and find support. Get above the BBC and we get a leg and a retracement, a leg and a retracement, and a leg right up to the long target. Then the market finds resistance at the weekly trading zone. When the market finds resistance, it's going to go look for support, which it found at the weekly trading zone and the BBC. So the market is set up for a bounce, but it has to overcome the step line. Then it's got to overcome red and falling. So your window of opportunity on the long side would be up there. And on the short side, you got potential support right there. So there's nothing, I'm not crazy about anything on the short side just yet. Okay, so back to the daily chart. As you can see, we got a little more red showing than we had when we opened the broadcast. The step line has crossed blue and climbing, so we expect price to drop to the BBC and that 24% fib extension. If we drop, and see the pullback held and the pullback held, if this pullback doesn't hold, then you should look for price to drop to the 24% fib retracement. Okay. These long lines are the fib retracements based on the low put in October 27th to the most recent swing high. 24% fib retracement right here. If the Fed surprises to the upside, you got potential resistance at the 38% extension and then the 50. And it's time for Michael. Michael, are you with us? He may be having trouble logging in.
Oh, here I am. I'm coming in. I'm just about there.
Okay, doke.
Just about there.
But we are ready for you.
Okay.
Whenever you're ready.
Set up that stream. So here we go. Should be coming over right now. There it is. Okay. Got it?
Okay, it looks good.
All right. Let me just check in here. All right, here we go. Good afternoon, everyone. Today is Wednesday, the 31st and final day of January 2024. If you have not taken a free trial with us and you want to, go here to mytradingiq.com and click on this button right here, where it says sign up for your free 5-day training, now 9:15 to 11:30 Eastern Time. When you click on that, you can be brought to this registration page. There's no credit card required. All that we ask for is your first name, your last name, your email, and your phone number. Fill out all of this stuff down here, and then down here, if you're using TradingView, your TradingView login ID, and if you're using NinjaTrader, give us your NinjaTrader machine ID. Okay, once you do that, hit register, and you'll be sent everything you need to get set up in the room in the morning. Also, all you need to get set up will enable all your indicators so we can set up your desktop for you. If you have any questions about how to set up your desktop, you need to just set up a meeting with us. Email support at CFRN.net or support at mytradingiq.com. Either one of those will get to us. Or you can go here to trading platforms and watch the videos here. If you do that and you still need help, again, just email us. All right, let's get into the spreadsheet. Now, you all know we have FOMC coming up in an hour, so we're going to trade right to the end of this live stream at 1:30. But getting into what we did this morning, we started out pretty good. It didn't take too long to get the goal for the day today. Well, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures on the bottom. I don't remember if it's there yet. Today's the last day of January 2024. We need 6 ticks in the NQ. We lost 7 ticks in the Russell. We made 13 ticks on the ES. That put us at 157. Today it took 23 minutes and 4 trades to get to the goal for the day. That we're up $2,112.50. And we took a total of 14 trades this morning. So we're going to end the month of January at $9,587. Over 21 days, averaging $456 per contract per 2-hour business day. Same stuff on the year. Now next month, this stuff down here will be different than the stuff at the bottom of the monthly. But getting our goal for the day, the month of January, we worked 8.31 hours in the month of January, 499 minutes. And with 13 contracts on, we're able to average $4,943 per hour for those 8.31 hours. Okay, so ending the month of January, $41,112 in the room. Getting the goal. Just getting the goal. Okay. Overall in the room, $124,637 with 13 contracts on. All right. So we're in the month of January in pretty good way. Now, that's all that stuff. Let's get into the let's get into the trades that we did and all that stuff. All right. We'll start out with crude oil since we had nothing on crude. We'll start out with crude, and as we always do, it's always on the left anyway. Let's see. Go all the way back to the beginning. I guess we had 1 trade there on crude, but we didn't make any money. We were waiting for it to hit the ribbon in here, hit the ribbon to get in the overbought. It didn't do it. Then it went right through the ribbon. Then it went right back through the ribbon. Then I missed all these black arrows because I was waiting for it to pull back to the ribbon, and it never did. When it finally did hit the ribbon, I took it, and we ended up with a break even. And right back through the ribbon, right back through the ribbon. This was during the lesson plan. Black arrows didn't pull back and hit the ribbon until it went right through it. Black arrows didn't pull back and hit the ribbon until it went right through it. This was during the break. That I missed that would have been a break even. I missed that, would have given a little bit of profit, but didn't put in a lower swing. This would have given a stop out, and it just was not producing a lot of trades today. And we had the 1 break even there. On the Russell, we had our share of trades on the Russell today. Let's go back to the very beginning. All right. Here on the Russell. Now, we started out here with a nothing. It was going down into the zone. So we didn't do anything. There was another blue arrow right there that would have given a break had you taken it. Another blue arrow here that would have given some profit had you taken it. And I didn't do anything with the Russell until all the way over here. And somehow I didn't get my stop to break even, and I stopped out on that one. So it was -10. Then right here, I got the Russell back to +3. So I had a 13-tick gain on that one. Then I stopped out again right there. Put me down to -7. And I believe that was it for the Russell. Yeah, that was all I did. During the break, no, this was right before the break right here. But I guess I missed it anyway. And then I missed that one too. That was during the break. There are a couple of black arrows here that I wouldn't have taken because of their proximity to the zone. And during the break, there was a green arrow, a blue arrow here that I wouldn't have taken, but I probably would have taken this right here first and gotten a break even on it. So I wouldn't have taken that, and I would have taken that. All right. maybe not. It didn't put in a higher swing from this blue arrow here. I don't know. It depends what I was looking at the time. If I was just looking at this bit right here, from here to the end, then this would have been a higher swing right there for me. So that is what that looks like. Now, where's the question thing here? Bring the question box up. I don't see any questions in there yet. Okay, no questions yet. All right. And that was the Russell. Now the ES today, we had a few trades here on the ES and crunch this up a little bit. Now these were all levels that we're seeing inside here in the DOM. Okay. And if we go all the way back here to the beginning, this is in pre-market. We grabbed this first trade right here. This was the leg length we're expecting. It took forever to do that leg length. All the way over here is where we finished that leg length up. Okay, but our first trade on the ES, we only picked up one tick. Then the next trade in here, we picked up 4 more to get us to +5. Then in here, we picked up 3 more to get us to, 2 more to get us to +7. And then in here, we picked up 6 more to get us to +13. All right, now all these numbers were in the DOM. It was giving all these numbers up, and it still hasn't made it down to there. That's still in the DOM. All right, so on the ES, we ended up with +13, sorry, +13. All right, so now the NQ trades. Let's go back to the beginning of this. All the way back to the beginning of the NQ. Yeah. We're almost back there. Almost here. Our first trade on the NQ is where we got the goal for the day, I believe. Or actually, our second trade on the NQ. Maybe our third trade. Yeah, there it was. We had a break even on this trade. Then we had another break even on this trade, and this is where we got the goal for the day on this one right here. We picked up 30 ticks on that. From there, we went and stopped out a couple of times. We stopped out on that one. So we went from 30 down to 10, and we stopped out again right there. We went from 10 down to -10. And then we picked up a little bit on this. We went from -10 to -6, so we got 4 ticks on that. And then missed all this stuff there in the lesson plan. And over here, we picked up 12 ticks on that. Went from -6 to +6. Picked up 12 ticks on that, and that was the end of the morning session. There was one more blue arrow here, but the outer bands were completely flat on that, so we would have skipped that. We would have taken this, and this would have encompassed both of these before it went up and gave us some great profit. If you let it ride, you would have gotten 30 ticks at least. Over here, I probably would have gotten a break even on this. And that was it. So that was the morning session for the NQ. Considering we have FOMC coming up, the markets were pretty much tradable today. There was some high impact news this morning. It was definitely high impact news in there this morning. And yeah, so that was all that stuff. Now let me get over here and click on the live stream. Okay. Here we go. I'm going to hit start stream on this. This looks like it's ready to go. Start stream. All right. So we'll start out the stream. Here we are. We don't have any trades here right at the moment, right now, but we're coming off a blue arrow over here on the Russell. We need that to pull back down, test the ribbon. A green arrow over here on the NQ. We need the same thing. This is looking like it's going to be up to the weekly trades. This did get up to the midpoint. The crude oil has eluded us so far this morning. We haven't had trades on the crude oil that have given us any kind of profit. But around the outer bands have spread out and it's starting to pull back down. It has to hit the ribbon here. You have to hit the ribbon on that. Okay. So we have just hit the ribbon on that. We got a low here of 04. Now we got a low here of 03. Add 8 to that. All right, that's where you're gonna put your buy stop. 8 ticks from the bottom of this bar. Okay, now we're not gonna have anything. Doesn't look like it could still be a thing, but I don't think it's going to. I'm not gonna put my buy stop limit order. I'm gonna wait and see if it turns into a green arrow here. All right, if we get an up close on this, there's a chance it could be a green arrow, but the black will not get into the red. But that is a deep pullback right there. I'd rather wait for something that looks a little better. This one over here, this one right here on the Russell. If it closes down, it's definitely no trade. And it did, and there's definitely no trade. Okay, so that's good. That's good for the indexes. Because we'll see if the indexes start to move up or not. We don't have anything here. Now, those of you guys that have been watching over the week, You know, I was saying earlier this week on the chart, I was expecting the SPY to get all the way down here. All right, all the way down here. Hasn't quite gotten there yet. And the QQQ, we were expecting that one down here. Now that is a lot closer to getting down there. All right, that's a lot closer to getting down where I thought it was going to go. He got down this morning. The options that we had said about those things, those particular things, the QQQ, they have increased dramatically, I think. I don't know, I was looking at it this morning. I think, what just happened? I think those are SPY options. I think in here, we're looking at the QQQs. Now, we've changed a lot today, but the QQQs, we're looking at the 420s, right? You can see it's at 420 right now. That's what we highlighted the other day, the 420s on the QQQ. And you can see it's at 420 right now. And if we throw this on the QQQ, just a picture, yeah, this is a picture. Where was that thing? It's over here. If we throw this, they should be on February 5th. That's what we're looking at. February 5th puts the spiders, we're looking at 480s, I think, right? 480s in here. We're up 75% today. The QQQ, we were looking at the 420s. I thought I just saw it. I guess not. QQ. Options. And we don't have any trades right now, so just spin options. Now, and you get the passport, then you get access to our options channel and other things. See, these are 67% right now, but they're at 370 by 380, 371 by 384 right now. With the latest at 387. And what was I looking at on that today? QQQs the other day. Not so sure that's the right one. 420s, right? 420s. And 129s. That's what the difference is. The 129s. Okay. Yeah, that's what the difference is. These are that was on the 29th. That's when I did it. Okay, so that's not it either. I don't know. But anyway, there was a big gain in those in the option tested the other day. And this is almost down to where I thought it was going to go to. Well, 420 is what I said, but 420 was above where I thought it was going to go. I was thinking down here to the BBC. I actually put this circle in here, thinking it was going to go all the way down to the circle at some point here. While we're looking at that, we didn't get any trades in here. I want this. Well, this is the leg length right here. This is the prior pullback right here. So this black arrow right in here is not that bad, considering this is how the pullback was. This pullback's shorter than that last pullback. I don't know. I'm just going to be conservative since we have FOMC coming up here. I'm just going to let it give me the right trade setup and not just going to rush into anything. So, does anybody want to see anything? Anybody have any interest in looking at any of the symbols? Anybody in the live stream? Oops. Anybody in the live stream right now? Whoa. Hey, Dwayne, is the live stream still going okay for you? Because right here it says it's ended for me. Oh, no, sorry. I'm looking at the wrong thing. Huh. I think I'm looking at the wrong thing. That is that one. All right. Here it is. It's going fine here. All right. Sorry. Let me close this. Let me close this thing. And I'll close that thing. All right. I don't see any questions coming in anywhere, so I'll just keep rambling. We don't have any trade setups here yet. We're wanting this to come down and hit the ribbon right here. We're in the oversold just a little bit. We're just about hitting the ribbon. But if we get an up close on this, it'll be a black arrow. So far, unless it hits the ribbon, it'll be a black arrow. All right. And that's what we're looking at there. Let's see. There is that. So that's all good. And we'll be looking for an up close here on the Russell. We have it down on the bottom of this bar is at 97.2, so we're going to buy 97.9 right now. Right, buy stop limit right there at 97.9. The reason I know that ahead of time is because these are range bars. I know what the bottom of the bar is. So I know I'm going to buy 8 ticks above the bottom of the bar. 8 ticks above. Oops, that's going to put me right in right there. Right there. I'm sorry, I missed the 8 ticks. I bought it 7 ticks, but I'm going to close up and put us in exactly the right spot here. There's the blue arrow. So I kind of saw that coming. Now the midpoint is right up above us. It's going to go 4 ticks into profit to move the stop to break even. So one more tick in there, and then I would have moved the stop to break even. One more right now. One more. One more. One more. There it is. Stop to break even. Now the rules for the trade setups can be found here at mytradingiq.com. Right here. If you go here to mytradingiq.com, these are where the rules are. Click on trade rules. Right here. All right. So what we just did right here was a long trade to buy with the slingshot. Now the black line in the rim must be on the bottom and in the green or the silver. In this case, it was in the silver, I think. And the lead line in the slingshot, the black line in the slingshot, must cross above the oversold. So it did all that. All right. So it did not hit the ribbon. It was in the green. Actually, the black line was in the green. So it did not hit the ribbon. Actually, it did hit the ribbon on the pullback. So it's a blue arrow. This is our highest probability trade with the blue arrow right here. It should get up to and above this 99.1 level right here. I'm just going to lock in a couple of ticks. Just one tick. It should get above this 99.1 level right here. Okay, continue the trend. And if you're looking at leg lengths, which was part of the lesson plan today, if you are looking at leg lengths, right, so we're out of that with just a tick. Let me slide this back over to the side. If you're looking at leg lengths, which is part of the lesson plan today, this is our leg length right there, and that's what it should do right here. Okay, that's where it should go when it starts going. As you can see, we are out right now with just a tick on it so far. Okay. The QQQ is still undecided over there. Now we do have FOMC coming up here in less than an hour. Okay, so it's gonna make the markets bounce all around. What I had said earlier, and I think I said it earlier this week as well, is I expect we're gonna go back where the market was on Monday this year. This is the Russell, and I think the ES is going to do a similar thing. Right in this spot on the ES and the NQ. This is this spot right here on the NQ. Right, the NQ has already reacted a bunch, and it is, the NQ does react a lot more than everything else, but I think that this is probably where it's going to end up. I didn't really look at the gold, and this is on the J card, E, F, G, H, I, J. J is April gold. I think we're in the right gold there, right? And that is just going sideways right here, waiting for the FOMC to come in. Good. Thank you. Thank you. All right. And the crude, well, I didn't really look at crude either, but the crude has done a full retracement of this move up here that started yesterday. It's 100% retracement of that move up. So I don't have any idea really what's going on with the crude. If you look at this on a daily, okay, on a daily, it's got a weird kind of pattern to it here. It's got a descending head and shoulder pattern. It's at a point right now where if it fails, it's going to go all the way down to here. Right. This is where it's going to find some support right through here. But once it breaks through that, it should go down below that, and then you'd be in a channel. Okay. That's what it looks like on crude to me. Speaking of crude, while I was looking at that, there was a bounce off the ribbon right there that you could have taken. And none of the other ones are giving any trades right here. But let's look here for a minute. And look at other things like Bitcoin. Let's see what that's doing today. Okay, so it's still working within here, within this. And I don't know what that's going to do, but we'll just have to wait and see. Now, over here on the NQ, you see there was a green arrow, but green arrow triggered right inside the weekly trading zone. I don't like to trade when it's right inside the zone like that, so I would have skipped that even if I did see it. It should put in a higher swing right here. That's what we should see, is a higher swing on that. Okay. All right. Any questions? Anybody? All right. Well, now we have sort of settled down, it looks like. We didn't really put in much of a lower swing here. We changed directions here. We didn't put in a higher swing. And this pullback leg length right here is good enough to change the trend, really. I'd like to see it go down a little bit more, get these outer bands spread out a little bit more. The ES is right inside, the ribbon is right inside the weekly trading zone, so we're not going to do anything there. And this ribbon is also right inside the weekly trading zone. So we're kind of jammed up here as far as trading goes. I don't know what the expectation is as far as the meeting goes today. You know, if they're expecting it to be, well, they're not expecting any movement at all, I think. I think they're expecting everything to just stay as it is, but the wording that comes out at 2:30 is where the big difference is going to be, I think. So I'll just take a moment here and I'll show you. If you haven't taken a free and go here to mytradingiq.com and the free trial right here. Now there's no credit card required for this trial. Okay, just click this purple button. It's going to bring you to this registration page. Just fill it out. First name, last name, email, phone number. These are all little drop-down boxes here. Yes or no questions. What do you trade? What charting platform do you use? All that kind of stuff. Simple one-word answers. Down here, we do need your TradingView login ID. If you have TradingView, give us your login ID or username. And here on NinjaTrader, we need your machine ID. If you have a machine ID for NinjaTrader. Okay. If you have NinjaTrader, we have some pretty good stuff that you can use with your NinjaTrader if you end up joining up with us. And yeah, so that's that. Look at all these. These are the puts right now that gained all this value so far today. And you know, at the end of the day, when we're looking at these puts, this is what the QQQs. So we're looking at 420s. So that's is what I had said the other day. And we want. I was looking at the fifth. Still the fifth, yeah. There's still the fifth put. So right now they're up 61% right now. On the high of the day right here was this is the high of the day right here, I guess, right? Last price bid ask percent change. It's not showing the high of the day. All right, with my TD Ameritrade, it'll give me the high and low of the day also. But I guess, you know, but I paid for that. This is free. And this might actually even be delayed. But anyway, you can see that right now it's pretty tight in here. The spread between the bid and the ask on that is pretty tight right now. We're pretty much right at the prior, which is right here. And if I click on it, let's see if it gives us any more information. It's doing this up here. And oops. Let's see what it does. Anyway, the strategist warned against a valuation trap. You think? The thing's trading at thousands of multiples. It's just craziness. Back in the day when I was a kid, you know, if you had a P&E of more than 10, stay away from it. That was before the internet. Before Al Gore invented the internet. Sorry. Mind dry humor. Anyway, we need this to get lower. This, the NQ, the green arrow here that I would not take because it was in the zone, just took off. And it's making a nice run right here. We expect that's going to pull back down and give us some sort of a trade setup. To get a trade setup now, we don't actually need to get all the way back down to the ribbon. All we need is for this black line right here in the slingshot to get into the oversold. All right. Now, it's best if it does both, but if this gets into the oversold and pops out of the oversold, you have another black arrow. Okay, so that is probably the most likely thing that's going to happen here. If it were to close up here and start moving up again from right here, you don't have any trade. It has to get into the ribbon or it has to get into the oversold, one or the other, or both. There, it's oversold. This is kind of what I was expecting. So this bar is going to low, and you're going to go 4 points from the bottom of the bar is what you're going to buy. Okay, so it's 91.25. You're buying 95.25. All right, so it'd be just like this. Okay, now if you get it up close and it pulls it out of the oversold, just give me one tick of slip, but it's pulling it out of the oversold, and we have a black arrow. That's what I was expecting right there. Now, if we had 8 ticks in profit on this, I'll bump the stop to break even, and it should put in a higher swing. However, if I end up with a break even on this, I cannot take another trade in this direction until it finishes. It's got to go one more. There it is. Until it finishes, I'm going to lock in 4 ticks on this. 1 point. All right, and I'm out with 1 point. So now I'm going to finish saying what I was saying. Now that I've taken that, I'm out of the trade. I cannot take another trade in that direction until we get a higher swing. All right, so I've already taken some profit. And I guess what I'm trying to say is the markets are always doing the same thing, right? They're going up and down and up and down and up. And so what we want to do is get them when they're down and sell them when they're up. Get them when they're down and sell them when they're up. Now, there's a chance that this is going to pull back deeper, like this one here. It didn't just go straight down. It went down, went up, and then it went down. This might do the same thing. Went down, went up, and might go down. But I can't take another trade until this puts in a higher swing, because discipline is 90% of this, probably more than 90% of this. And the rules say if you get into a trade, you get into the trade to put it in the higher swing. All right. If it doesn't do it, then you don't trade again in that direction. And the reason you don't trade again in that direction is because if you stopped out on this one, you don't want to stop out on the one right after it in the same direction. All right. I committed to this being the trade that was going to put in the higher swing and continue the trend. It didn't. I took a little profit out of it, but I'm done now. I'm done until it continues the trend. Until it continues the trend right in here. It's going to get up above this level. See, I took this little bit right here. I bought it right here, and I sold it right here. And it's got to get up above this level now before I'll consider taking another trade on a pullback again. Okay. Now, the lesson plan today was the leg lengths. If you look at the leg length back right here, that's how big the leg length back was. This leg length is a little bit less than that right here. So far, this leg length is still okay. Even if it pulled back and hit the ribbon right now, the pullback leg length would still be smaller than this pullback leg length. So it's still showing a little bit of momentum on the long side. I really want to see it close up above this level, and then we can get ready for the next trade. Okay. Okay. Anybody with me on all that? So right there, I took a chance on that one, thinking that that was going to be the one that was going to put the swing in. All right. Now it wasn't. This one turns out to be the one that did actually just put a little bit, tiny bit higher swing in. So I see it go a little bit further up, and then I'll capture the pullback. All right. Over here on the crude, there was a trade there on the crude that I missed. It does have a pullback number at 85. It hasn't gone 87 down to, yeah, it's gone 5 ticks in profit. It's too late. It's too late to get the crude. I didn't get it. So when I say it's too late to get the crude, for anybody that's watching that's new in here, the rules are pretty clear. Those are perfectly clear. Where were they? They're right here. That never did go to where I wanted to go. But the rules are perfectly clear in here. You move the stop to break even on a 7-tick range after 4 ticks in profit. All right. There's no ambiguity in that. It's after 4 ticks in profit. It's not 3 ticks. It's not 5 ticks. It's not sometimes 5 or 6 or 3 or 4. It's 4 ticks in profit. So if you were going to move your stop to break even, if you got the right entry and you were going to move your stop to break even following the rules after 4 ticks in profit, and price came back, if you didn't get filled and it's already gone those 4 ticks, you would have moved your stop to break even had you gotten filled. You're done with that trade. If you didn't get filled and it went that far, You're done with that trade. It's done all it had to do, all it should have done, all you would have expected out of it. The minimum. It's done the minimum that you would have expected out of it. You're out of that trade. You're not going to take it on a pullback. That would be chasing, right? And we don't chase trades. That would be chasing the trade, and we don't do that. So if it's gone from the proper entry point to 4 ticks in profit and you didn't get a fill, skip it. There'll be another trade. There'll always be another trade. All right, so over here, we just barely put in a higher swing here, so this really didn't give you anything else to go on. And the pullback length right here, that leg right there, now when it was here, the pullback length wasn't that big, right? But if you look at this, this goes to the lesson plan from this morning, right? Let me draw it with this instead. It'd be easier to see. In here, this was our pullback length, right? Right there. Was our pullback length. Look how far we pulled back on this one. Okay, so now we've pulled all the way back through this level right here without really putting in a higher swing. So what this is the beginning of is a rounding top. Okay, and right here you see the ribbon is crossing. Right here, we're going into a no trade zone right here. So now we need it to, it's already pushed down below this level. It's already pushed below that level right there. So now what we anticipate is it's going to pull back up and push down like this, right? That's what we anticipate. Makes sense, right? So when it all comes together here, we're in a no trade zone right now. So let's go down, hopefully a little bit deeper, separate the outer bands, and then pull back up and bounce off the ribbon. You see how the ribbon's all bunched up in here right now in the no trade zone. You're not going to trade anything right there. You're going to wait a few minutes. I'll come back up and hit that. Now it's going down to the weekly trading zone here, which may present a problem for us in a few minutes. But for right now, there's just no trades. Okay, see this one over here on the crude? We missed the first one. It's pulled back up. If you were going to chase it and get back in it, you'd be in it right now. All right, you'd be in it right now, and you would have just bumped your stop to break even. Now that's if you took any of this. If you didn't take this, then you could take this. All right, if you took the black arrow, then you can't do it. If you took this ribbon trade right here, then you can't do it. But if you didn't take any of those, then you could take this blue arrow right here. All right. So again, let me say the rules in case there was any ambiguity in that right there. Because I was saying how you wouldn't take it here. If you missed the trade, you wouldn't take it. Right? But there was no blue arrow or green arrow. After any blue or green arrow, it has to put in a lower swing. Right? After a blue or green lower swing. If you miss a blue or green arrow and you don't take the trade, you can't take any trade after that until it continues the trend. With a black arrow or a ribbon trade like that, you can take a blue or green arrow if one happens. Okay, but right in here where it was pulling back up, none of that happened. So you could have taken the blue arrow if you missed all of that. You could have taken the blue arrow right here, but that would have given you a break even if you did that. I didn't do any of it anyway. I'm still thinking everything's getting really choppy right here. We only have 5 minutes left, and I don't think we're gonna have another trade. This has a chance of giving us a short, but it's going right down into the weekly trading zone. This is in the weekly trading zone. This just barely put in a lower swing. It might pull back and give us something on the short side. I don't know. This gave us the one blue arrow right there that went 7 ticks into profit and pulled right back up. So there is no chance on me now taking another trade. But see, this is going to give us well, it's not going to give us anything right now because we haven't hit the ribbon. But if we did hit the ribbon, it would go blue arrow going right into the zone. Right now, if we use it pulls out of the overbought, it'd be a black arrow going right into the zone. Okay. This actually did put in a lower swing. You could take that green arrow if you want. I'm not going to. When I say upswing, I mean it gets down here below the prior swing low. Price gets down below there. Now it used to be years ago. If you've been following us for years, you had to have a body that closed down below there. All right, but that was when you're using DT Pro and Ninja Trader. Now with TradingView, you can do it with just a wick, right? this right here is kind of what I was expecting. I didn't know if it was going to be green or blue, but it's going right into the weekly trading zone. So I'm going to leave that alone too. Okay. Does anybody have any questions about any of this? I don't see anything pop up in the live streams. Are there any? DJ, do you have any questions about anything? Do you want to see anything other than futures? Okay, I'm happy to go look at other stuff other than futures. Over here on the side, this is Bitcoin that we've been looking at since the middle of December. And in here we said we were expecting everything that it did, right? In here, we're expecting run up to here or pull back to here. And now I'm expecting it to get up here to 50,000. A few weeks probably. Next month maybe. As long as it stays within this channel, these green arrows and these green lines right here. But if you want to look at anything else, you know, E-U-R-U-S-D. I don't know if you're a Forex guy. Stuff works on everything. It works the same way too. You're looking for the arrows with the trend. Right, that's the only kind of arrow you can get is with the trend. And this is a daily chart. But if you break this down, you look at it on the 30-minute if you want. 30 minutes not looking so good in here. But I like things on a range bar. Now you can't really do range bars, small range bars with Forex because you get the spread. But if you do something a little bigger, like a bigger range bar with Forex, then you can use the range bars in here, and they work out the same way you would expect them to work out. Okay. Yes, a lot of things are waiting on the Fed right now. What AI stocks are you looking at? What would you like to look at for AI stocks? Just give me a symbol. We got through the weekly trading zone here on the NQ. All right, and over here on the Russell, we didn't pull back deep enough to give us a trade yet. On the crude, this all right, it's 128. I think we're gonna run out of time here. But DJ, if you have a symbol you want me to look at before we run out of time, I run out of time in 1 minute. So type in a symbol and I'll look at it really quick with you. Okay, anything you want to look at, I'll give you my humble opinion of where it sits right now on the day. This is registering over here on the other side of that. So I'm just going to keep 3 symbols. Okay. All right, let's go look at those really quick. Get MSFT Microsoft. And this is on a 50 range. Okay, on a 50 range. That means every bar is 50 cents in here with this one. Okay. So it's priced at $400. You know, 50 cents isn't bad. 50 cents per bar isn't bad. What time frame do you like to look at it on? You know, do that on daily or intraday, day trading, you know, scalping. This is what it looks like on, this is on a 30-minute. So you can see all the way back here into the middle of the month. And in here you have that big wick, right? And now it's changed directions. So now what we'd be looking for is a pullback up toward the ribbon right here. On a 5-minute, okay. Pull back up toward the ribbon, but let's look at the 5-minute. Okay, so here on the 5-minute, you already had your one shot at it earlier right here. Okay, and it went in, put in just a little bit lower swing. It's at a point right now where you should trade it again, probably. And it should push down below this level right here. But I don't know if you're interested in shorting at all with stocks, or if you're only interested in going long. I would say there's no reason to go long on Microsoft. Okay, and AMD. All right, now AMD is at a direction change right here. You see right here, it's in a 50% retracement of the day's action. Right in the middle, this is waiting on the Fed, I think. It's more in a position to go long than it is short, but it is waiting on the Fed, so I would be doing with it right now. It's right here is the full day's action, and you're at the 50% part of that. If you go back here a little bit further, you know, I had a huge move down here when earnings came out. And There's a little anticipation to those things, right? Looks like, right? And I don't know. It's setting up right here. If you go in by leg lengths, it's setting up right here for another leg length down. Right, percent retracement. Did this one down, retraced. This one down, retraced. If it's going to do the same thing, and it does go down, down is the way it's choosing, then the leg length looks like this. We'll start right here. Okay, this is what your leg length looks like. So on the downside, you are looking at right about there, 160. Right. We can look at this again tomorrow. I'll put a mark there. We'll come back to this again tomorrow. That's AMD. If I can put text on it. I don't think I can I? No, I can't. Right. We can look at that again. That's AMD on the downside. What was the other one you wanted to look at? The other one, NVIDIA. NVDA. Okay. So this is the same. Well, it's not the same situation, but it's got the retracement part of it. The same retracement part of it is done. All right. And this is actually looking bearish. It hasn't done a full 50% retracement right here. I guess it'd be about a 50%. But this is actually looking pretty bearish right in here. And if you're doing the same leg length thing that I just did with that other one, I'm going to go with the middle leg length right here and not the first leg length, because the middle leg length so exceeded the first leg length. But this one and this one kind of match up. There was some reason right here where it really dropped. But I'm going to go with that. And so we're looking at, for NVIDIA, we're looking at 600. And again, we can look at this again tomorrow, even later in the day. But if you guys come back tomorrow, okay, if you want to come in the morning, let me show you, I guess I should show you that. The morning session is live trading. All right. And well, this is too, but the morning session is really just me getting in there and trading and showing you how everything works. Again, to take the free trial, let me do that part. I haven't done that in a little bit. If you want to take the free trial and get in there in the morning, go here to mytradingiq.com. All right. Just click on this purple button. There's no credit card required for it. You can get into it tomorrow. It's 5 days of training. All right. And that 5 days will actually start for you probably Monday or something like that. But you can get in there tomorrow. Anyway, you get in there tomorrow. It's 5 consecutive days starting tomorrow. All right. There's no credit card required. Go on, it's going to bring you to this registration page. And I see that you're in here, DJ. So what you would give us is your name, DJ Logical, right down here. Give us your first name, your last name, all that stuff. They're all little drop-down boxes. But right here is where you give us your TradingView login ID. All right, and we can set up your desktop so you have everything running on your desktop today. Okay, that's all you have to do. Take the free trial. I may have run over my time by 5 minutes, but it's okay. I covered all those things. Crypto, did you want to look at anything? I see you just came in 3 minutes ago. I don't know if there was anything in there you wanted to look at, but I can wrap it up and send it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's City Park. Yes, 5 days, even if it stretches over the weekend. That is correct. Okay. And scrolling up. Okay. Yep, Dwayne's got it right now. He's taking it back.
Yeah, I thought you were ready. I thought you were ready for me to grab it.
I am. Yeah, I've run over anyway. If anybody has any questions, you can email us at support@cfrn.net or support@mytradingiq.com. Right, if you have any questions, just email us there. All right. Thanks for coming.
All right. Recap of the morning session.
This morning, it took 23 minutes and 4 trades to get to, hang on, let me give you the exact number, to get to $2,112.50.
Great job.
Thank you.
All right, guys. Here's a last look at the daily chart. Okay, we've come off the low of the session a little bit. And as Michael said, and I said earlier, top of the hour, you're going to get the FOMC statement. That'll create some volatility. And then as things sort of quiet down, Jerome Powell will take the podium, deliver his prepared statement, and then the real volatility can come when he starts taking questions from the audience. So real quick on the ES, we're still consolidating at the zone. On the Dow, continuing to drop. Russell, support at the zone, sending us back up to the BBC. NQ, pulled back up to the zone and the BBC. So when that step line crosses, expect price to pull up to the BBC. Now that's resistance times 2. But we have a huge news event coming out. It's the granddaddy of all news events. Best position during the Fed announcement is no position. We've gone from zone to zone, back to the zone, down to the zone, and we're currently sitting at the zone. Crude. This zone is 75.45/75.50. So we got to take out that low. So it's a tight squeeze, but 60 to 50, 75.60 to 75.50. The zone is 75.45/75.50. So again, the institutions are positioning themselves for the FOMC statement. So the best place to be right now is flat. Remember on gold earlier, we talked about how the step line had crossed. And as you can see, price is trying to pull back to the BBC. It's got to take out this low first. Then it's on like Donkey Kong down to the BBC, which will typically be support. The pullback holds more often than not. But with a huge news event, anything can happen. Now, if we consolidate just sideways for another candle, this is probably going to turn into red and falling, which is bearish. Blue and climbing is bullish. This move up was a beautiful move. Perfect stack. Price, step line, blue and climbing, BBC, right up to the zone where we expect resistance. The zone that was published for our members and trial members Monday morning at 6:15 a.m. Eastern. Silver has hit the short target again. Now, I drew in this window today and this window today. If price breaks through this low and grab your 2 pennies here, go for the day. If price gets above the BBC and gets above red and falling, then your window of opportunities right there. And the euro is consolidating at the BBC. See, when the step line crossed, price pulled right back to the BBC. Happens over and over again and again. And remember, when price reaches a zone, 70% of the time is consolidation, 20% of the time rejection, 10% of the time the slice. To become a lifetime member, go to mytradingiq.com. 9 out of 10 new traders fail because they don't have someone to teach them how to do the job. No matter what career path you go down, you always need somebody, a professor or teacher of some kind. Maybe you want to do heating and cooling, HVAC. You're going to apprentice under someone, right? And they're going to teach you how to do the job. That's the purpose of our live training room, to teach you how to trade. Not just one specific instrument, but how to trade anything, anywhere, anytime. Passport, there's no recurring fees, no upsells, no nonsense. You not only have lifetime access to the live training room, but unlimited one-on-one mentoring. Strategy you learn and the indicators you own for life are fluid across all markets and all time frames. As a passport holder, you get the Logic 247 alerts, the concierge trade alerts, and you're able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. And you get the key to the vault that has all the previous workshops. Everything a trader needs, all under one roof at one low price. So we started yesterday, a good word for the day, when God gives you a vision, part 1. Let's do part 2. Acts 26:19. I was not disobedient unto the heavenly vision. When God gives you a vision, number 1, it will interrupt you. Sometimes God will speak in a voice you can't tune out. Other times, like Jonah, God will let you go to the bottom to get your attention. Either way, things won't go right until you say yes to Him. Number 2, it will illuminate you. You may not like what God says. Ananias didn't like going to pray for Saul of Tarsus, a man with the power to put Christians to death. But God said, "Go, for he is a chosen vessel. I will show him how many things he must suffer for my name's sake." It's Acts 9:15. Notice the word suffer. The enemy isn't going to send you a congratulatory letter because you have decided to do God's will. So be prepared for an attack. Number 3, it will inspire you. You will accomplish things you never dreamed possible. Look at Gideon. When God found him, he was hiding in a wine press. That's in Judges 6:11. Not exactly a promising start. When the angel called him a mighty man of valor, he replied, "I am the least in my Father's house." When the angel said, "The Lord is with you," he replied, "If the Lord is with us, why then has all this happened to us?" When he finally took the job, he wondered, how can so few of us defeat so many of them? Yet at that very moment, his enemies were having nightmares about him. Judges 7:13. The secret of victory lies in knowing. Philippians 2:13. It is God working in me. And you, and you, and you. That's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Gotta get a new bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.